Hi there, you're watching Buy Now Sell Now on ET Now with me, Shreyanshi Singh and Snehi Shah. And over the next 1 hour, we'll get all of your stock-related queries answered from both a technical as well as a fundamental perspective. But well, first things first, let's take a quick look at the markets. And Snehi, does look like the Santa rally may have eluded us, but the tinge of red has found us.
Well, absolutely. Christmas colors continue to be on our markets, and because it's been a fair share of red and green. Hi there, good morning. Let's take a look at what the markets are up to. Nifty around that 23,788 levels, off the lowest point of the trading session, but a little bit far away from the highest point of the trading session as well. Not doing all that bad, not doing all that well either. That's the Nifty for you. 23,787 on the Nifty. Sensex also following suit, a tinge of red coming in on the Sensex. 78,650, at least we're holding around those levels on the Sensex, so not much to worry about. Nifty Bank, however, outperforming both of these benchmarks, 0.2% uptick coming in. What's also doing well right now is the mid-cap space. That's also looking rather healthy, 0.3% uptick coming in, so good moves. However, the broader markets are not doing all that well in totality, because the small cap index is lower by roughly 0.2%. India VIX, a spike up of 2.5%, still not much to worry about because we're still at those 13.6 levels. So we're under 14 right now, looking good on that front. What's doing well sectorally? Pharma, realty, FMCG, banks and PSU banks. On the flip side, media tanking away, led by auto, IT, metal and energy. Surprisingly, pharma continues to hold on to the strength it saw on Friday, but the big winners of Friday, auto and IT, are languishing in the red. That's what the market roundup is looking like right now. Just a couple of quick buzzers to talk about. Vodafone Idea, JSW Steel continuing to hold on to their respective gains since morning.
Well, absolutely then, and it just looks like the Santa's red has found us instead of Santa rally. But with that, let's kickstart the show, and as we do that, on the top of your screens as well as on your screens, you should be able to see the numbers shortly where you can write to us at. Now, do remember that you should be writing to us for the buy price for the stocks that you're already invested in, and for the stocks that you're wishing to invest in, do mention the time horizon that you then have in mind. And throughout the show, the number on the top of your screens should be available to you. So do write to us with your queries. But with that, let's kickstart the show and take the first query coming in. Before that, let me introduce Gaurang Shah, Senior Vice President at Geojit Financial Services, who will be joining us to answer all of your stock-related queries then. And let's kickstart the show. Thank you so much, Gaurang, for joining us. Firstly, good morning. The first query that we in fact have is coming in from our investor named Manoj, writing to us from Goa. He wants to know your take coming in on Finolex Industries. Now, he's not mentioned the time horizon. In fact, he just wants your take coming in fact, for the short term. What do you make of this particular counter?
Thank you very much for having me on this platform, and morning to all of you all. So first, a prudent disclosure, we have a positive coverage on Finolex Industries from a long-term point of view. On the fundamental side, companies primarily into manufacturing of plastic products and other products as well. Has not been a great performer in the recent times, but from a long-term point of view, in case if the investment is from that similar time horizon, the targets that we are looking at is about close to 364. But prudent to give a little bit of longish time horizon, given the kind of underperformance of the stock. We believe that the earnings should improve stepping into the new financial year, and that should reflect upon the stock price as well.
Review coming in on Finolex Industries. Gaurang, hi, this is Snehi also joining in. Next query coming in from our regular viewer, Satya. Satya, we really appreciate you writing to us to this extent. Viewers keep writing to us like Satya, and we will keep addressing your queries. Our WhatsApp number is flashing on top of your screen. But Gaurang, yes, coming to Satya's query, he is asking if now would be a good time to switch from ABFRL to Redington for the next year. Redington, his average price is 160 rupees, ABFRL 230. So he holds both of these stocks, but now should he be switching allocation completely out of ABFRL and put all of that into Redington? What's your view on both of these stocks?
So, hi, good morning to you as well, Shari. The problem is we don't have coverage on Redington, so I won't be able to give a specific comment. But his current investment in Aditya Birla Fashion and Retail Limited, that is ABFRL, my sense is that it will make prudent sense to stay invested in this stock. You know, over the last 2 years, if I'm not mistaken, and even in this current calendar year, this company has acquired a lot of niche and marquee brands and names. And by the virtue of that, we believe that the numbers should look much better from 1st April 25, that is next financial year. And earning usability should also improve. 336 would be the target from a long-term point of view on ABFRL.
It's the target price that Gaurang then has in mind when it comes to ABFRL. The next one, Gaurang, that we have is coming in from Mohit, who's writing to us from Ludhiana. Wants to know about Bandhan Bank. In fact, 500 shares at a buy price of 187. And the time horizon that he then has in mind is 2 years. What do you make of this one then?
Sadly, this has been one of the underperformers amongst these small stroke mid private sector banks, including RBL. Now, coming specific to Bandhan Bank, let me give a prudent advice. First of all, given the volatility in terms of delivery of numbers, the bank tends to perform in terms of stock price very erratically. On bad numbers, you will see the stock correcting quite heavily downwards. And on good numbers, which is very seldomly, the stock performs well, but then succumbs under the selling pressure at higher levels. My advice to this investor is, first of all, have at least, excuse me, to 1.5, 2 year plus kind of time horizon. This is required because the turnaround to reflect upon the earnings and then that on the stock price. There has been a lot of news flow. There is a new management, a new person, I beg your pardon, at the helm of the bank, and that should augur well. So if you have that kind of time horizon, stay invested. Targets are not very, very fancy. 186 is the target on Bandhan Bank from a long-term point of view. In case if the earnings do improve systematically and consistently quarter on quarter, then we might relook into the target price. But as of now, 186 is the target price.
Okay, stay invested, but a couple of cautionary flags coming in from Gaurang, especially on the earnings front for Bandhan Bank. That's the outlook, Mohit. We hope that answers your query. But on that note, we'll slip into a short breather on this edition of Buy Now, Sell Now. Viewers keep writing to us and we'll be addressing your queries just on the other side of this short break. So we'll be right back. Please stay tuned.
Welcome back. Thank you so much for staying tuned in. Well, let's continue taking all of your stock-related queries then. And we also have Aamar Singh, who's the Senior Vice President Research at Angel One, joining us. Aamar, good morning. The first query that I have for you is coming in from an investor who's not mentioned his name, but he's invested in IDFC First Bank, holding on to 200 shares at a buy price of around 70 rupees thereabout. He's a long-term investor. Should he buy or hold?
Yeah, good morning and thank you for having me on the show. So, see, IDFC Bank, what we are seeing is that the bank overall tries to, or the stock price tries to rally and sustain above the 80 and the 100 mark, but somewhere or the other, there's some selling pressure which keeps on happening. And what I see is that the current levels are quite crucial and important for the stock, because if I look at from a long-term perspective.
Okay, I believe we have snapped that line. We'll reconnect with Aamar. Gaurang, meanwhile, coming to you with the same query. What's your view on IDFC First? Our viewer has 200 shares, average price of 70.86, holding for the long-term view. Gaurang, if you could give us your sense on this stock.
This is also a very challenging time for IDFC Bank. The second quarter, if you actually recollect the commentary of the management post the second quarter earnings, there was an elevated concern on the MFI segment loans. And this MFI problem is not only limited to IDFC First Bank. There are a couple of other banks which have this kind of problem. But the good part is that the management also mentioned that they expect the recovery in the MFI segment in the third and fourth quarter, and possibly a complete resolution of that in the next financial year. So we maintain a positive stance on IDFC First Bank. We have an accumulate recommendation, and the target stands at about 71. And just in case if the MFI problem is resolved and there are better NIMs and profitability to look at, then the targets might stand to get revised.
All right, then that also answers the query coming in from P. Srinivasa Rao, who's also asked about IDFC First Bank, in fact. But tell you what, Gaurang, I'm going to come right back to you because we do have Gayatri from Chennai writing to us about Equitas Small Finance Bank. Average price of 94 rupees and PNB also 128. Not mentioned how many shares she's holding on to. But what do you make of these two counters then?
This is also a challenging time for small finance and small payment banks. So first on PNB, and the good part is that some public sector banks delivered good set of numbers. PNB is one of them. We have a positive coverage on PNB from a long-term point of view. On the second one, I believe is it Equitas Small Finance Bank? I'm sorry, I couldn't get the name properly.
Yeah, the other one was Equitas Small Finance Bank, Gaurang.
Great. So on Equitas Small Finance also we have a positive coverage, but here again the problem is the current value of the current price of the stock and the targets that we have. So on Equitas currently we are having a target of about 69. Here again, if the numbers improve, then we'll have a relook at these targets post the third quarter numbers. But hold on to both Equitas Small Finance as well as PNB from a long-term point of view.
Whole call on Equitas as well as PNB. Amar, yeah, well, hi, welcome back to the show. We'll come back to you now. We have a query coming in from our viewer Shaurya, who's writing to us from Gurgaon. He wants to ask about Reliance Industry for the next 6 terms. Is now a good time to buy post the correction? That stock has seen a little bit of correction coming in on the stock price. Tell us if now would be a good entry point, time to accumulate, time to just sit on your holding, or time for an exit. What's your view?
I would say definitely not a time for exit because we've seen some 25% correction in Reliance, and Reliance ideally somewhere anywhere between 1150 1200 is a good buying opportunity from a medium term to long term perspective. What we are seeing though is that on the charts from a long term perspective, yes, there is weakness. Some of the indicators also point towards weakness. So what it effectively means is that we could witness Reliance getting into some consolidation. Higher levels would be sold into, so anywhere between 1280, 1320, that's the zone of resistance for Reliance on the upside. So it's more of a trading range that Reliance is actually getting into. So it could be 1180 on the downside and 1320. So it's a 140 rupees range where Reliance is likely to trade over the next few weeks.
That's the take coming in as far as Reliance is concerned. Gaurang, I'm going to come right back to you because we do have Sri writing to us from Bengaluru, wants to know about Mazgaon Dog. 100 shares at a buy price of 4,700 rupees. Short-term outlook, what do you make of this one?
Well, this is a tricky one for me because I would not in a position to give a short to medium term outlook, but I'll just speak about the entire defense sector. My humble request to all your viewers and investors is that don't invest in defense and capital goods engineering or railway related stocks from a short to medium term point of view. You may, end up getting some small profits if you are, positioning yourself well. But fundamentally, if you ask me, I think all these sectors you need to have longish time horizon compared to the other sectors like the cement or the private banks or the NBFCs or the ITs or the FMCGs of the world. The reason being that these companies which are associated with either defense or cap goods engineering or railways, the orders to execute the order book, you need long gestation period. And if you have short to medium term, you may end up, possibly being on the wrong side of the trade. But from a long-term point of view, all these 3 sectors look very, very strong. Just to make a point for Mazgaon Dog, I think it has got a very decent order book very recently in the last 6 months. And the company has got very strong capability, experience, and technology to execute that order book. So it's a very strong company, but I won't be specific because first of all, it's a short-term query, and secondly, we don't have a coverage on Mazgaon Dog.
Okay, well, on that note, time to slip into yet another short break on this edition of Buy Now, Sell Now. Amar and Gaurang will be with us on the other side as well. We'll be right back. You stay tuned. Hi there, welcome back. Thanks so much for staying tuned to Buy Now, Sell Now. Before we keep it going with your queries, just want to mark the development on the bottom of your screen. Nifty looking rather good right now. We've seen a sudden surge coming in. We've managed to cross that 23,800 mark, and it's been a quite quick spurt coming in on the Nifty. So looking very good on that front. It's a 162-point recovery of the day's lowest point, 0.7% higher, 0.2% higher coming in on the spot basis. Looking very, very good. Maybe today is finally the day where we see 24,000 once again on the indices before we head into the new year. You don't know, we still have 2 days before we head into 2025. Let's hope we do so on a 24,000 footing. But nonetheless, Yes, then viewers, let's keep it going with all your stock queries. We have Aamar and Gaurang back with us. Aamar, coming to you, our next query is coming in from our viewer Ahuja from Ambernath. Mr. Ahuja holds 100 shares of Emami, bought at 800 rupees per share. He's currently sitting on a 27% loss, and he's asking if he should continue to hold in hopes for some recovery, or book the loss and buy NTPC Green Energy instead. The time frame he's looking for is 2 years. What would you recommend now?
Yeah, as far as Imami Limited is concerned, the stock, we've seen the stock correct from almost 850 levels, currently trading around the 600 mark. So ideally at this level, he should not exit, because this is where the support lies even from a long-term perspective. But the stock has the potential to rally from the current levels towards the 680, 700 levels. So there you could look at maybe exiting the stock, but not at the current levels, and then move into some other stock, but not at the current levels. I wouldn't recommend exiting.
That's a take coming in as far as those counters are concerned. Tell you what, the next query that we have is coming in from RK, who's mentioned 3 counters. Actually, he wants your advice, Gaurang, on which 2 counters among these 3 he should pick: NTPC Green, Waaree Energies, and Ola Electric. What do you think?
NTPC Green is something that we had subscribed. The band was 102 to 108 for the IPO. The shares were given out at 108. And on the subscription side for NTPC Green, we had recommended subscribe from a long-term point of view. So making that IPO note as a base of our recommendation, I would say that NTPC is a good stock to stay invested from a long-term point of view. They've got some huge plans to enhance their current green energy production capacity. Ola Electric also featured in our subscribe recommendation for the IPO note. But the problem with Ola Electric is, firstly, the loss on the balance sheet. Secondly, we have news flows which is negative today. Thirdly, the issues related to customer complaints redressal and service issue. Though we had a subscribe on Ola Electric, we had given a clear caveat that in case if you decide to invest in Ola Electric, you need to have at least 2 plus 2.5 or 3 years kind of time horizon. The third, I'm sorry, I don't recollect if we have a coverage, so I won't be in a position to answer that.
One was Waaree Renewables, Waaree Energy rather, but that's okay, no problem. Let's move on. Talk about the next query coming in from our viewer OSN Reddy from Hyderabad. He's also another frequent viewer who keeps writing to us. Mr. Reddy, thanks so much for doing that. He's holding 48 shares of Nestle. Aamar, Nestle is a stock we don't very frequently discuss on this show. Buy price of 2,471. 48 is the quantity that he holds. The stock is significantly lower from his buy price, roughly 300 rupees lower. Time to average now, or to completely book losses and just exit his entire holding is his query. What's your view?
If you look at Nestle, I would say most of the FMCG stocks, we've seen some real sharp correction, and Nestle is not an exception. Having said that, the stock is trying to form some sort of support on the current levels, because earlier the stock traded as high as almost 2,800, and then it's around 2,160. So if I look at it from a very long-term perspective, on the long-term charts, that's on the monthly charts, I see that there is some sort of consolidation which is happening. But again, it's clearly evident from the charts that this stock isn't really going anywhere in a hurry. So it's more of a range play, because what's happened here is that on the intermediate term trend, the stock is extremely weak. So being in oversold territory, we could expect a pullback towards 2,300 odd levels or so. So between 2,100 and 2,300, that's a range that the stock is likely to trade over the next few months.
And another regular viewer of the show writing to us, Venu, is a senior citizen writing to us from Chennai, Gaurang. He wants to know about Escorts Kubota, and he wants to know if the 4,300 level is on the cards for the stock at this point, because he's holding on to 50 shares. Buy price was 4,000 rupees, sitting on a huge loss at this point. What do you make of this counter though?
Honestly, I'm sorry to disappoint him, because we initially had a buy coverage, and since our target were in place, we have given a sell recommendation on Escort Kubota. The problem is on the earnings front as well. There has been a little bit of below expectation earnings for Escort Kubota. In case if he decides to book, and the second thing is, the price at which he's bought the stock at 4,000. I believe it was closer to the all-time highs that we saw on Escorts Kubota So to make up for that looks a little bit difficult as far as fundamentals and earnings is concerned. Now, just in case if he's willing to book out from here with a loss, the alternative that I can suggest to him is a switch to M&M, which is closer a little bit below than where the price of Escort's Kubota is. I think M&M is trading at somewhere close to about 3,000 plus kind of levels. I think if he makes that switch over here, then, and again, with a long-term point of view, then my
Okay, we'll reconnect that line with Gaurang. Amar, coming to you, we'll keep it going with Gaurang on that view, but Amar, coming to you with a fresh query. We have our viewer Nirmala Vishwanathan who's writing to us, holds 100 shares of Asian Paints at a buy price of 2,274. Been holding since 2020. Now, Asian Paints is a stock that has seen some bad days, some deep shades of red coming in over the last couple of trading quarters on the back of negative numbers, also on the fundamentals not looking very good. Earnings have been rather weak. On the charts, however, leaving all the fundamentals aside, what does this stock look like to you on the charts? And 100 shares at 2274. What's the outlook going ahead?
Yeah, I would say that you're right that if we look at this stock, this year the stock is down by almost 33%, and from 3,500 levels currently it's around 2,270 odd levels. If you look at the structure of the stock on the long-term charts, that clearly isn't really very promising. So that tells me that there is definitely weakness in the stock. But since the stock has corrected significantly and a lot of value erosion has happened, the stock is inching towards very crucial support zone that's around 2,200 odd levels on the yearly chart, because that's going to be a level where I don't think the stock would have touched some of the technical indicators once it took off almost 12 years back. So even in the COVID times, the stock wasn't approaching that technical level, means in terms of technical average. So that level comes around 2180, 2200 level. So it's roughly around 100 rupees from the current level. So I wouldn't recommend exiting. We could witness some pullback, but one needs to understand that this is not going to be a dramatic V-shaped recovery. It could be some pullback and then again some sort of selling pressure. So any pullback opportunity can be used as an exit opportunity. But yes, 2180, 2200 will act as a very strong support zone for Asian Paints.
A strong support zone in store for Asian Paints, but time now for a very quick breather on the show. When we come back, we'll continue taking all of your stock related queries. Don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, let's continue taking all of your stock related queries. And the next one, Gaurang, that we have is coming in from Tom Swargis, who's writing to us about NMDC 200 shares bought before the bonus issue at 247 rupees. What do you make of this counter?
Well, so on NMDC again, on the entire metals related pack, there has been a little bit of choppiness and volatility. Now, in case if you're talking about specific investment on NMDC, again, from a long-term point of view, post the adjustment, we believe that the stock is well placed in terms of earning visibility. Domestic consumption looks quite strong. The only problem is the on and off news flows that we have coming in from China, which creates a positive, negative reaction depending upon which way the news flow is. I would say, in case if the investment is from a long-term point of view, stay invested. We believe this stock should do well from long-term time horizon.
Do well from a long-term time horizon. Stay invested is the call coming in on NMDC. Thanks for that. Amar, coming to you. Next query is coming in from our viewer Tushar from Delhi, asking about your opinion on Oracle Financial Services. Now, this is a stock that has been the biggest gainer over the last 1 year from the broader markets. A 200% rally coming in. This stock has tripled its price just over the course of 1 year. This viewer is asking what's the view on this stock going ahead. Also asking, due to the incoming Trump admin, if the sector outlook is positive. So an overall outlook on this sector as well as on the stock, because after a 200% rally just in 2024, do you still believe the stock has more fuel in its engine to keep going, or time for some consolidation, some slowdown now?
Yeah, I would say that this is one stock which definitely has performed exceedingly well and rewarded its shareholders significantly, because if we go back and look at the stock, so the stock ideally used to trade anywhere between the 3,000 and 5,000 range. So taking that out, the stock is currently around the 12,700 odd levels. So if I look at the charts from a long-term perspective, they continue to be very strong, but fresh entry at the current levels definitely I would not be advisable. It's not going to be easy to make an entry at these levels because, talking about the Trump administration coming in, yeah, that's going to be. I don't think it would be. It would be very. I don't think it's going to be negative for our Indian IT space. Rather, it could. There could be some benefits. I would see from that perspective. But yes, how the rupee behaves against the dollar, that's something also is going to be very important going forward. But I see that IT stocks or the sector likely to perform well, but there could definitely be headwinds in terms of some reactions or something. As far as this stock is concerned, those who are long, they can stay, they can hold on to their positions. But at the current levels, I wouldn't recommend buying because the momentum there on the intermediate term trend, that's a weekly charts or the short term charts, that continues to remain sideways. So I wouldn't recommend entry at the current levels.
That's a take coming in as far as Oracle Financial Services is concerned. Gaurang, tell you what, the next query is coming in for you. Subrata Mukherjee from Calcutta wants to ask about GNFC, a good buy before the budget?
Well, I think the entire fertilizer stroke urea space seems to be buzzing as and when we have budget approaching. But the good part about the sector, that is fertilizer, is that in the last 3-4 years, there have been a lot of policy changes in terms of how to educate our farmers in terms of utilization of fertilizer urea, and at the same time create more produce from the field that they have. I won't be specific on GNFC, but we have two other companies associated with this fertilizer sector. One is Coromandel and another one is Chambal. Just in case if the investor is not invested in GNFC, then my advice would be to look at either Coromandel or Chambal from a long-term point of view.
Coromandel and Chambal looking slightly more attractive than GNFC right now before the budget. Amar, next query coming for you from our viewer Madhu from Hyderabad. She's holding Mahanagar Gas. We don't have the quantity, but the buy price is 925 rupees per share. She's asking why the stock is falling day by day. Should she continue to hold or move on to any other stock within the space or even outside?
So if you look at Mahanagar Gas, we've seen the stock correct by almost not 50%, but significant correction from almost 2,000 levels to 1,100, currently it's around 1,268. So we are seeing some sort of bottoming out formation in the stock, and the stock could rally towards the 1,400 mark, where one can look at an exit opportunity. Otherwise, one can hold on to the stock at the current levels.
All right, then hold on to this one as far as the take is concerned coming in on Mahanagar Gas. But the next one that we actually have, Gaurang, is coming in from Mahalakshmi, writing to us from Hyderabad. Wants to know about the 55 shares of ABB that she's holding on to. 8,290 rupees is the buy price. Should she average for the long term? What is your take when it comes to this counter then?
Well, so entire capital goods engineering space saw a little bit of correction starting last week. We saw how the stock prices of likewise ABB, Siemens, and some other companies corrected. And as I was referring to my comments in Mazgaon Dog, the earlier query that was there, and I mentioned about capital goods engineering sector as well. So remain positive on ABB India, Siemens, L&T, KC International, to name a few. Vabag is the other stock that we are also positive. On ABB specifically, well, we have a target of 8,800 plus from a long-term point of view. And I think this correction that we are witnessing, it's a good opportunity for those who are either looking to average in case if they bought it at higher level. It's a good price correction to average. And if you want to make a fresh investment as well, I would recommend that as well. So currently hold and add would be the recommendation.
It's very bullish after coming in on ABB from Gaurang. Amar, coming to you. Next query coming in from our viewer Ekam Baraya from Hyderabad, asking would now be a good time to continue to hold or completely exit and sell the entire holding in Bank of Maharashtra. 300 shares bought at 54.6 rupees per share. He can continue to hold for 1 year if this seems to be a good bet to hold on to. But what's your view? Hold or sell?
I would say that Bank of Maharashtra one can hold at the current levels because the stock has witnessed some decent correction and currently it's around support level. So I would recommend that he can hold on to his position. There are two levels which I would like to talk about. One is that somewhere on the downside, 48.50 is a crucial support zone, whereas on the upside 60 is a zone of resistance. So it's likely to consolidate in this zone. The moment it starts trading above the 60 mark, one can expect a sharp rally. But for that, overall, the banking space would need to perform.
All right, then with that, we're completely timed out on this particular show, that is Buy Now, Sell Now on ET Now. Thank you so much, Gaurang, as well as Aamar, for joining us. But with that, out of time, thank you so much for tuning in.
Just
Stay tuned
very
for
quickly
markets.
before we go, want to quickly mark the Nifty. We have barely crossed that 23,900 level as well. Almost a 200-point recovery coming in just on our intraday basis. Broader markets holding up superbly. Nifty Bank up 1% from the day's lowest point, and so is the same with the Sensex as well. Looking very good right now. Markets are looking phenomenally well. Let's see if we're able to scale 24,000 today. I sure am hoping for it. Shansi, I hope you're hoping for it too.
But absolutely, and with that, we're handing it over to Markets at Noon. Thank you so much for tuning in.
If you like this video, then like, share and subscribe to ET Now.